What's up, YouTube? Eric here. I got a stock market update video for you today, and Amazon earnings as well as Enphase. Let's get right into it. So as you can see on your screen, another red day, and we were down over 2% in the NASDAQ yesterday, finished today down 1.76%. S&P 500 was down 1.18%. Dow Jones was down 0.76%. Now the good news, there's good news and bad news in this video. I'm going to cover both, the good and the bad. Now the good news, treasury yields have come down, oil prices have come down, and GDP actually came in stronger than expected. US economy sizzles in Q3, defying slowdown fears. Now, normally when GDP comes in better than expected, the market rallies. What's the situation here? Why is the market going down today? Here's the change in US real GDP. And if you look at this, it goes back all the way to 2021, so post-pandemic. This is the best quarter we've had since the market top and basically the end of 2021. You can see in Q1 and Q2, we were actually negative, and then we went positive, but we were trending downwards. And this is a big spike up at 4.9%, better than expected. Flashback, this time a year ago, there were widespread predictions of a recession in 2023. The new data on the heels of a solid 2% plus reading in the first 2 quarters of the year make the odds appear more remote. The question is, what's going to happen in 2024? We've been talking about the consumer slowing down a little bit. These numbers here, this data is going to be lagging data. What we don't know is we don't know the future. We don't know 2024. So last week, Jerome Powell spoke. Fed Chair Jerome Powell said the economic growth has consistently surprised to the upside this year. The record suggests that a sustainable return to our 2% inflation goal is likely to require a period of below trend growth. They're basically saying that they need the economy to go into recession so they can get their inflation number down to 2%. And really, that's their focus, getting inflation down to 2%, no matter what it takes. Raising rates, hurting the economy, unemployment going higher, and so on. So that is why the market is down today on this news. And you're really in a lose-lose situation. If GDP comes in light, the bears come out and say, told you so, we're going to a recession, things are light. Numbers come in better than expected. Well, then you have the fears about the Fed because the Fed could raise rates more and cause more pain in the markets, especially when you think of growth assets, growth stocks, spec stocks, and so on. As we've talked about many times on the channel over the last several months, we've been talking about GDP. The consumer is responsible in this last quarter, again, 68% of GDP. So again, what happens when the consumer has to pay more? Interest rates are higher. It costs more for rent, costs more for a mortgage, for a car. Student loan payments kick in and so on. So the market is in a very fragile situation. And honestly, if Amazon would have had a big miss, you'd see the market selling off even harder. Now, so far, the NASDAQ, we're down basically 10%, a little over 10%. We're in correction territory, and that's pretty normal. If you look at the QQQ, it's still up 30% year to date. So the market ripped up in the beginning of the year into July. It was probably ahead of itself. We said it on the channel many times, market's probably ahead of itself. In the beginning of the year, in January, we did Fired Up Wealth virtual conference. In that first session, I talked about expectations for year end on the S&P 500, and I said something around 4,300. You know, we closed today at 4,137. So is it possible that we wash out some more and there's some buying at the end of the year, have kind of a Santa Claus rally, and we finish somewhere around 4,300? It's very possible. Could it go lower? Absolutely. So the good news here, Amazon did have a pretty strong quarter. I'll go through the numbers now. Cloud was going to be the key. Remember, Google missed on cloud. Essentially, that caused a sell-off in that name, and it was really an excuse for tech stocks to sell off. And if you really look under the hood, it generally means that Microsoft is taking market share, taking some of the business maybe from Google Cloud Platform. Amazon's still doing just fine. AWS missed by just slightly by 0.1 billion. So Amazon reports better than expected results. Revenue jumped 13%. Check out this EPS beat. Earnings per share, 94 cents versus 58-cent estimate. That's a huge beat. Revenue, 143.1 billion versus 141.4 billion. That's also a nice beat. Amazon Web Services, 21.3 billion versus expectations of 23.2 billion. So a slight miss there. Luckily, it wasn't more than that. Advertising, 12.1 billion versus 11.6 billion. Advertising has become huge. Advertising segment is larger than YouTube's advertising segment at this point. So a beat across the board with a little bit light here on cloud services. Microsoft beat on cloud and Google missed on cloud. One thing to note here in Amazon, third quarter 2023 net income includes a pre-tax valuation gain of 1.2 billion, including a non-operating income expense from the common stock investment in Rivian Automotive. That's compared to a pre-tax valuation gain of $1.1 billion from the investment in the third quarter of 2022. So this revenue beats by 12.6%. We talk about hyper growth, regular growth, mature growth. Amazon's a nice company, but when it's a huge mega cap tech company, over $1 trillion market cap, that growth starts to slow down. It's what we call mature growth. It doesn't pay a dividend. It's growing at 12, 13, 14, 15% a year. It's really mature growth. Now, AWS segment sales increased 12% year over year to $23.1 billion. It would have been nice to see that, 13 or 14%. I think the stock would be up higher if you saw a little bit higher number there. Fourth quarter guidance, net sales expected to be 160 and 167 billion versus 167 billion consensus. So a little bit light on the low side of that guidance, and growth between 7 and 12%. Again, mature growth. So Amazon at one point was up 5%. It's up 0.61% as investors digest. We also have earnings calls coming up for both Amazon and Enphase, so the stock could move either direction depending on what's said on those calls. Right now, Amazon's sitting at a $1.23 trillion market cap. The 12 months trailing P ratio is a 95, so it's still not dirt cheap. And this is a $81 stock in the 52-week low. Year to date, it's still, it's up 39.33%. So even after hours, it's basically up 40% year to date. Let's switch gears and talk about the elephant in the room, Enphase. Now, earnings are out. I'll go through those in a second. We've been saying that Enphase is very interest rate sensitive. We know SolarEdge came out with preliminary results, and those numbers were pretty bad. They were pretty weak. Now, those preliminary results from SolarEdge talked about weakness in Europe, and SolarEdge has a larger market presence in Europe. Enphase's growth story is really in Europe. And so that's going to hurt the stock because the growth story is there. Now, the earnings weren't great, but they were about what was expected. They weren't nearly as bad as maybe what the guidance was on SolarEdge. The big problem with Enphase and the reason it's down after hours, the guidance. This is a quote from the CEO of Enphase. Due to macroeconomic conditions, our revenue in the U.S. for Q3 2023 decreased by 16% year over year. It's never good when you have a growth stock that's decelerating in growth. And you saw what happened after the pandemic with a lot of those names. You look at the names like Zoom and Etsy and Roku, those type of names, they get hit and they get hit for a long time. As long as interest rates are high, this is going to probably have some pressure, especially with the guidance that I'll get to here in a second. Our revenue in Europe decreased 34% year over year. Now, that was expected because SolarEdge basically told us it was going to happen. But again, SolarEdge has more of its business in Europe. Enphase, it's more of a growth story in Europe. Just recently, Enphase rolled out in Greece, and they're trying to roll out more in Europe and grow their presence there. Now, this is due to high inventory at our distribution partners, along with softening in demand in our key markets. At the time of this post, Enphase down 18.3% after hours. Let's head over to Discord, where the team is always working hard. We have a channel that's called Earnings Highlights Only. It's just simple bullet points. You can see Enphase for Q3. So it's a miss across the board. Revenue, $551 million versus $566.02 estimated. Now, that's a miss. It could be a lot worse, but it's a miss, and it's not good. EPS, $1.02 versus $1.03 estimate. So that's not bad. Missed by a penny, but still a miss. The big one here, guys, guidance, $300 to $350 million versus $601.2 million estimated. This is cut by almost 50%. In fact, on the low end, it would be cut by more than 50% if they come in at $300 million for Q4. So time for some real talk here. And I'm going to show you exactly what I own. I'm going to show you a chart on both of these stocks as well. So definitely stay tuned. So here's the deal with Enphase. Enphase is one of those stocks. We've said it's interest rate sensitive. Now, my preference to buy the stock as an entry to DCA was 125, and I was very adamant at waiting at 125. Let's go over to the chart, and then I'll come back to this session here. Let's just get Amazon out of the way really quick. So the S3 on Amazon is going to be about $109. The 200-day simple moving average is closer to $117, and it's just right under the S2, which is just over $117 in S2, and that's kind of where it came today, and it's sitting in that area now. So could it get lower? So could it go down to $109 in the S3, something like that? I think it's possible on Amazon if the market rolls over. It's also possible it kind of holds up this 117 area. I think for me, it was just an $81 stock back here in January, ripped from 81 to 145. I think if it gets under like 115, it's getting more attractive. But remember the P ratio on it, it's still an expensive stock. It has a nice growth story, but it's mature growth and it's not cheap where it's trading at. So Amazon growing, 10, 12% in here. You look at valuation metrics, 95 in the PE here. If you look at the PE gap forward, it's still a 56. has a nice balance sheet, has gross profit margin of 45%. It's a solid company, but it's not dirt cheap. And we'll look at the valuation, and you don't look just at the PE ratio. You look at a lot more than that. But if you look at things like, price to book forward, 6.58, price to cash flow TTM, 20.25. You can see some of the grades and valuations on here. Now the PEG, the non-GAAP forward PEG is 1.48. If you get the PEG under a 1, that gets more attractive. But nonetheless, just keep in mind, even if it does get $115, or if it gets to less than that, Amazon's not a cheap stock. Okay, so let's get to Enphase here, because I know a lot of you probably want to hear my thoughts on Enphase. And you're gonna want to grab a soda and some popcorn and buckle up, because I'm gonna drop some truth to you here. I'm gonna tell you exactly what I feel. Don't hold it against me, all right? Don't hold it against me. I'm being as real as I can, and this is about my opinion and what I'm gonna do with my money. At the end of the day, you got to do what's best for you and for your money. So this stock, I remember people asked me when it was over $300, it was $339, and I said it will need to consolidate. If it's me, I'm waiting for at least below $200. Now that I said that when it was $339. As the stock came down and as I watched the chart, I said 150 was getting more attractive. But for me, you can see in orange, we do chart day every single Wednesday, 9 o'clock a.m. Eastern in Patreon Discord. You can join us. Go to patreon.com/firedupwealth. And some of this was also from YouTube videos, but 125 or less was my preferred entry. And I did add 125. I'll show you exactly what I own here in a second. So just stay tuned. I believe you could see another drop next earnings on macro. Basically, earnings are macro related because this is interest rate sensitive. Said it many times. I think long term, the company has opportunity. Short term, this is not a good situation right now. So we said under $100 is possible. And I said at that time, pound the table. Well, that's before we knew all the information too. There's no way that anybody can predict. We know that it's interest rate sensitive. We know it's slowing down, but I'll be completely upfront with you. There's no way I could have ever predicted that the revenue would drop by 50% on the guidance. I've been investing 25 years. I can't recall that happening on maybe 1 or 2 stocks I've ever owned in my entire investing career. This is a very bad situation. Okay. And I did say recently, if you go up here, I was saying in Discord last week to be careful. I did not buy. So I bought a couple more shares under $100. I wasn't buying the last couple of days. I said, be careful. Let's wait for earnings. If there's an earnings miss, you could see this at $75, especially when analyst price targets started coming out. And I said this too. We saw price targets come out at $85, a couple of different analysts. I think even I saw one in the 70s. When price targets keep getting lowered, that's not going to be a good setup for a stock. On top of that, going back to Discord here, we said 556 institutions have liquidated Enphase in the past month. Lord Baltimore says, is that a bad sign for Enphase? Well, it's not a good thing ever. It means institutions are bailing. Okay, on your screen, this is my $1 million plus portfolio, my primary taxable brokerage, Enphase. So I own 65 shares. My average cost basis is $116.58. Down 17.5%. Of course, that's before earnings. So it's down another 15%. It's down 32%. And my loss, $13.25. Now this is sitting, $1.4 million plus portfolio, and you're sitting at a couple $1,000 loss. It's not the end of the world for me. And I don't go heavy on stocks like this. And that's why I generally, if I don't have a lot of conviction on a stock, I'm going to wait. I'm going to dollar cost slowly. I wanted to see next earnings. I've been saying we need to see the next earnings before we buy more, before we go any heavier on Enphase, because the macro is not a good setup with interest rates. I've been saying it over and over again. I like the company. The thing is, I cannot control what happens with the macro and how it's going to impact the company short term. Is solar power just going to go away? I think the answer is no. But the reality is, the facts are that the macro setup is horrible and interest rates are going to continue to put pressure on stocks like Enphase. Now, we just talked about GDP, how that come in hot, how inflation, we got to get that to 2%. There's a decent chance we see interest rates go higher again, maybe even in December. And that's going to shock the market again, and it's going to make these stocks kind of roll over. It's really hard with Enphase right now. It's easy to say, okay, yeah, now it's in the price range. I'm going to go buy. But let's look at that a little bit more closely. So you can see it's broke through the S3. Right now, it's sitting around $80 in post-market. So this is completely broken for the technicals. It's broken all the moving averages. It's under the Fibonacci retracement. It's under all the Fibonacci pivot points. It's below everything. It's completely damage at this point. The stock is broken. Now, we always say, is the stock broken or the company broken? Well, in the short term, honestly, both. A lot of times a stock will report decent earnings and sell off 15, 20%, and I'll be buying it, hand over fist, because I'm like, the earnings were fine. The company's doing great. And again, I've been saying, if earnings miss, you can see this stock at $75. And it's crazy to think, because it was $340 and everybody wanted to own this stock. They thought it was going to the moon. It went from $340. Now it's sitting at $80 after hours. So here's the reality with Enphase. I don't have all the information because the earnings call, I think, is going on right now or is going to start soon. I need to listen to that to fully digest it, to understand. What I can tell you from first glance, this guidance is absolutely terrible. I do my very best to do my due diligence to make sure I understand the macro and the companies that I'm buying, which is why I didn't go heavily into Enphase. Because honestly, in a normal market, Enphase is something where I might want 3% in my portfolio. And I'm sitting right now at a fraction of a percent in my portfolio. So I have a lot of opportunity to add shares. So the question you have, what price should you be buying? And Eric, are you buying more shares on this drop with Enphase? As of right now, until listen to that earnings call, the answer is I'm not. And I've seen a few people buying it after hours, which is fine. It might work out. But so many people are going to come on YouTube and they want an exact bottom, exact price you have to buy. I'll tell you this stock is not just going to recover overnight unless interest rates drop overnight. If interest rates remain higher for longer, which that is the narrative we have, especially with the GDP information we got today, I think it's a really dangerous stock to put my money in, even though I did buy some myself when it was under $125 a share. I didn't go heavy for this reason. If you own the stock, you have the option, obviously, to ride it out, to add more shares, but know that it could go lower and it could remain under pressure for longer. I think what you might see is more analysts come out and cut the price target even further. And honestly, at this point, and people say, well, you like the stock when it was 125 and now you're saying it could go under 75 and now you're going to tell me it could go even lower. The reality is we didn't have all the information. We knew that the macro would impact a stock like this, but we didn't realize the capacity that it was going to hit it. Now, I had a hunch that it could, which is why I didn't go too heavy, and I wasn't just loading up when it did drop under $100. People were saying, hey, it's under $100, time to pound the table. When you're talking about stocks in July, when everything's bullish and the macro, it had some problems back in July, but the macro environment right now is much worse than it was in July. So you had this bull market, kind of run up, and the macro has deteriorated significantly since that time. So the market is going to be fluid. It's not static, and things change all the time. In hindsight, honestly, guys, this is a stock that I probably shouldn't have bought any shares. Now, fortunately, I only have 65 shares in the main. I could have easily waited and not bought any shares. But on the other side of that, I could have, went heavy and have 1,000 shares or something, or several hundred shares, and then be in a lot of pain. And don't get me wrong, guys, I have stocks that I have gone heavy on that have been hit, over the last couple of years. And I've got stocks that are red. I'm not perfect. Sometimes you just have to admit you're wrong. In Enphase, if I look back in hindsight, I admit that I probably shouldn't have touched it at all. The thing is, the numbers, the fundamentals looked really good on the stock. We knew that the macro was going to impact it, but we didn't know to what degree. So I'm thinking, yeah, guidance might come in, 10, 20% lower, and the stock is priced at this. I do some quick math and say, yeah, under $100, probably pretty good. Well, when the guidance is 50% lower, that changes everything, because you've already seen decelerating growth. Now you're going to see decelerating growth probably for all of next year. You might see, who knows, that guidance could even be revised down. They might miss it. Now there's a chance that they beat that guidance. Maybe they're just sandbagging. They're kind of lowballing it. But I wouldn't make any gambles on that, honestly. For me, I think you have to wait. I mean, if you really love the company and you're honestly okay if it goes down, and you're going to hold it 5 or 10 years, and you're okay if it goes to $50 a share and it's not going to bother you, eat your heart out, go buy as many shares as you want. For me, I got to listen to earnings, and right now, unless something on that earnings call really changes my mind, I'm probably just going to sit back. I don't think I'm necessarily going to sell out of it or anything like that, being down 30%. I might just hold on to it and be patient and wait and see what happens. If things improve over the next year or two, this stock could easily double very quickly, but you're going to have to be patient. But this is not a setup for me where it's like, yeah, if I buy it now, it's going to recover quickly. And maybe I'm wrong. And maybe the stock goes back to $110 in a week or something like that. It's possible. But if I look at where the market was trying to value it, The only consideration is if the market knew it was going to miss by 50%. If institutional investors knew something that we didn't know, we knew that it was going to be light on guidance more than likely, but 50%, that's a whole different story. So being as completely honest and upfront as I can with you guys, don't hate me for it. I shouldn't have bought the stock at all. I'm glad I didn't buy it at $300. I'm glad I didn't buy it at $200. I'm glad I didn't buy it at $150. I waited for under $125. But this guy kind of goes to show you, no matter how much a stock goes down, it can still go lower. And the bottom is always zero. I'm not saying that Enphase is going to go out of business, but my point is it's a $350 stock. It goes to $250, you think it's a buy. It goes to $150, you think it's a buy. Next thing you know, it's $75, and who knows where it ends up going from here. It reminds me a lot of a stock like Upstart, where it just ran like crazy all the way up and came down. You think, well, it can't go any lower, and it just keeps going lower and lower. And next thing you know, it's $15 stock, and you think it's impossible. If you went back in time when Upstart was $300 or whatever, I'm just kind of guessing off the top of my head some of these prices, but when it was way at the top, in 2021, if someone would say, hey, in 2 years, this is going to be a $15 or $20 stock, you'd probably never believe it. Here, let's just look at this together. So this actually got down to $11.93. It's trading right now at $23. And this was a $390 stock, October 15th, 2021. So this went from $44. You could have bought it at $44 and basically got a 10x, almost a 10x stock, and thought you were a genius just in a couple of years. And you never would have thought that if you bought it before anybody else knew about it, December 18th, 2020, that it would literally, go from $44 to $11.93. And I'm not saying that necessarily Enphase has to do the exact same thing. My point is it can always go lower. Look at Enphase. It was a $5 stock in 2018. It got up to $336 here. This is December 2nd, 2022. So the top of this actually was late last year, about a year ago. You go back to March 2020, March 2020, the pandemic, it was a $26 stock. Obviously it's grown a lot since then, but you've seen a lot of these companies like CrowdStrike, for example. And when it went below $100, a lot of people thought it couldn't do that, but then it ripped after that once it kind of found its sea legs. So to think, could this stock go to $50 or something? I think it's possible. And, again, it could bottom at $78, $9 here or whatever, and it could go higher. And then you're going to be like, Eric said it was going to go lower. If I tell you to buy it now and it goes lower, you're going to say, oh, you said it was a buy and it wasn't going to go lower. So it's kind of a lose-lose setup for me too. What I'm telling you is that the risk is there. Long term, I think there's opportunity within solar, but right now the macro is telling me I have to be very careful, and maybe I just pause and sit in the sidelines for a little while. That's all I got, guys. If you're new here, subscribe to the channel, click that bell for notifications, drop me a like, drop me a comment. Have a great rest of your day. Take care.